the banks have no limit on what they can short. So if JP Morgan, HSBC, whoever it is, wants to short a couple 100 million ounces of silver tomorrow, no big deal. They can do it on a click of a mouse. And it's pretty shocking that they can do that.
Today's guest is a supporting sponsor of Liberty in Finance.
Welcome back to Liberty in Finance. We are delighted to have this widely followed returning guest back on our show again. It's been a long time, too long. We're talking to Keith Neumeyer. He's the CEO of First Majestic Silver, a very influential silver producer and one who is quite an advocate for truth, transparency, honesty in the silver market, and common sense, boots on the ground guy. Keith, thanks for coming back on Liberty in Finance. Today is Wednesday, June 5th, 2024.
Well, thanks for that introduction, Donegan. It's 20 years in. September of 2023 was our 20-year anniversary, and we just released a 20-year anniversary coin, which is pretty exciting. Going back 20 years, we've seen a lot of changes in the silver space and the precious metal space, and it's been a roller coaster, as you know.
It's been a long decade and a half, at least, for those who are retail investors in the silver space. A lot of people thought that the wheels had come completely off our financial world back in 2008, 2011, and have been kind of holding their breath for a long time since then. In addition to that, you and I and Rick Rule did a three-way interview together a while back, and that's one of our most watched interviews, called Massive Silver Shortage Coming, or Massive Metal Shortage Coming, where you and he laid out the case that there's been a multi-decade-long neglect of exploration, development, etc., of bringing new online sources of metals into production, and that in the face of that, we have a runaway demand that just keeps going up every year. And now we have political tensions on top of that, where we have countries repatriating their metals to their own homeland and making sure that they have secured, either in local jurisdictions or friendly jurisdictions, sources of critical material. So we want to touch on a lot of those things. First of all, could you bring us up to date on your view of the current silver supply, the physical supply situation? Because we keep hearing about every quarter, only one or two more quarters till the major exchanges run dry of silver. It's going down. And then it seems like there's one or another things that happen to make that postponed further. And one of the most recent ones is the Shanghai Exchange coming out with, it looks like perhaps some executives from major bullion banks visiting the Shanghai Exchange, who, by the way, have some of the most concentrated short positions of silver on the COMEX and LBMA markets ever. So what is your current outlook for the current physical silver supply and the direction you see that heading going forward?
Well, you saw the smash down in the last couple of days, and that's all, the shorts are trying to dissuade individuals like ourselves to, put money into this as an investment into silver. It doesn't affect the industry because it doesn't cost, for a BMW, whether it's 30 grams or 40 grams of silver, in an electric car, whatever the number is, and it's a highly held secret of exactly how much silver is in any kind of automobile or any kind of device that we consume as a human race, because all these numbers are kept, very close to the chest. But nevertheless, it's quite irrelevant if silver is $100 or $200 or $300, compared to the price of an automobile. So, but yet the banks are short hundreds of millions of ounces, and they're feeling the pain today. And I know that for a fact. We deal with the physical market, and yet as a miner, we sell our ounces, and we have to sell our ounces because we're not in the business of hoarding our own ounces. Our institutional investors expect us to take advantage of the current metal prices, and they want to see those revenues and those profits, and that affects the analysts, and that affects the target prices they put on our stock, and that affects the shareholders who own. We have 80,000 shareholders worldwide. If all of a sudden we have no revenues, then that's not going to be very good for our share price. So we have to take advantage of the current metal prices, which we do and are doing right now. But it's interesting because the bank limits that a lot of these traders have hit their limits, which I remember going back to 2011, the same phenomenon occurred, but it was so long ago that I kind of forgot about it. But now, as a miner, the gold producers and silver producers out there, they're having issues selling metal at current metal prices because all the credit limits are all at their limits throughout the entire banking system. Because there's a delay from the time we sell our ounces to the time we actually deliver the ounces. And that could be a 30-day delay, it could be 60 days, it could be 90 days. And that difference is financed. And the banks finance that on behalf of the mining sector. And that's a relationship that's been going on for decades and decades and decades. And that's just the way it works. Yet now, those limits have come to numbers that have reached a breaking point. And I'm going to spend some time on this topic over the next couple of months and see what can be done from a mining business perspective to see how we can avoid such things in the future. One of the things we have done is open our own mint so we can pull silver out of the banking system. We can talk further about that. But Dunnigan, your question was also on the supply side. I think you had about 10 topics in your preamble, which I should have had a piece of paper in front of me and wrote them all down. But on the supply side, we haven't seen any new supply, and I don't see any new supply. I see less supply. So if you look at Coeur d'Alene's or Coeur Mining's production numbers, you look at First Majestic's silver production numbers, Pan American silver production numbers, silver production is dropping worldwide. And there's all kinds of reasons for it. We can have maybe when I see you in Florida, we can have a beer together and I can explain all the different nuances that go on in the mining sector. But permitting is the biggest issue. And that is getting more and more difficult. Countries around the world are more reluctant to permit mines. We're trying to get silver on the strategic metals list. I remember watching an interview from Pierre Lassonde about, I guess it was about 2 years ago, and he said on this interview that he was called up by the mining minister of the province of Ontario here in Canada, and the minister asked him, how do we produce more metal? And Pierre Lassonde was blown away. He said, "What do you mean? How do we produce more metal? You give us permits so we could produce more metal." And this minister of mining had no clue, right? So if Mexico wants to loosen up their permitting, or Nevada or Arizona, or Canada, where most of these metals come from, we could produce more metals as an industry. But for the mining sector, and I'm the chairman of a company called First Mining Gold, which many of your listeners probably are familiar with. We've been working for 7 years on a permit. The asset was discovered in 2010. It's now 2024, 14 years after discovery, and still hasn't got a permit. We're not expecting a permit for probably the next 2 to 3 years. And that's if everything goes smoothly. So the burn rate on that permit is about $20 million a year. So over that 20-year period, it costs around $300 to $400 million just to get the permit. Then you have to break ground and build the mill, which is going to be another $600, $700, $800 million. So how long is it going to take you to get payback on that? So institutional investors, they don't have the patience. So you go to an institution, say, I want, $50 million, I'll pay you back in 20 years. They're going to laugh at you. So it's a very difficult industry, very tough to raise money for, and it's a long game. And you have to have patience as an investor, but you have to have patience as a management team. And at First Majestic, I think we've proven ourselves, over the last 20 years. But it is a big challenge. Talking about silver, talk to the governments and ask them the question: why don't they put silver on the strategic metals list? If they did, then maybe governments would wake up and say, hey, look, we need this metal, and we're going to fast track permitting. And rather than taking 20 years to get a permit, we'll do it in 3 years. And if they did that, then we could potentially get silver ounces produced, or more silver ounces produced on an annual basis. Sorry for such a long answer.
That's perfectly fine. And now you mentioned the price regime has shifted to the higher end of where it's been. We've been in you could claim a trading range between roughly 20 to 30 over the past decade and a half. And now we're at that 30 boundary and have penetrated it for the first time ever in the past couple of months. And now it looks like it may be forming a support level. How does that change the game for First Majestic Silver and other silver mining companies?
Well, first off, it cannot be a blip. So for us as a business, the biggest question is, do we increase investment? Because there's a delay, and I talked about the delay in permits. Well, there's also a delay in investment. So, we decide to, this year we're spending $39 million on exploration. We're spending, I think it's $65 million. Hopefully I don't have that number wrong, but $65 million on development, underground development. So this is building tunnels underground to pull rock out of the ground, to take it to the surface, to put in the mill. It costs a fortune to do underground development. You're building tunnels that are kilometers long to go after silver and gold. And it takes, it'll take about a year approximately to build a 1 kilometer tunnel. So, so you're building that tunnel into an ore body that it's there because you've drilled it. So X amount of ounces sitting in that ore body. It's going to cost you, $10 million to get into it, but it's going to take you a year to get there. You're counting on $30 silver prices or $2,400 gold, and the next thing you know, silver's $20, and you've just spent all this money to get there. That's no longer economic.
So in the current environment, do you need to, and does the industry tend to need to wait and see how these price levels persist before making that kind of investment decision that would result in bringing on additional future supply?
Yeah, I think that, you as you follow this industry quite well. And when you see, management teams doing resource estimates at, $1,400 an ounce gold or, $1,600 an ounce gold, which we're seeing, regularly now. It used to be $1,200. Now at least they've moved their numbers up. I'm talking about the big gold players out there. It tells you, and it tells the institutions that the executive teams that are running these big businesses aren't bullish on the metal that they're producing. If they would actually do the numbers at spot, the economics of the economics of basically every mine on the planet would all of a sudden become economic. But they don't want to do that because they don't want to be under the criticism of the regulators or the banks. So they're automatically conservative. So they shoot themselves on the foot just by using lower metal prices just to save them. Yet what that ultimately does, it prevents them from making the investments necessary to grow those assets.
When you mentioned a little while ago about First Majestic opening up First Mint and doing some vertical integration of your supply chain, what goals does that help you to achieve? What success metrics are you looking at to say that's why we did it and it's working or it's not working?
Well, Miles Franklin, who you're associated with, would be much better answering this question than I would be. But I'll tell you why I did it. So, here we are. We started selling ounces, to the retail public in 2008. And that business built over time, and it's something we're very proud of. We're the only company that actually uses our own silver, ships it out from Mexico, gets it refined in the United States, produces a retail product, has an e-commerce website, and sells our product, on the internet. And it's been going on for some time. So a couple of years ago, after the whole COVID situation, when the interest came into the metal during the Reddit squeeze and all that, and then even since then, the demand for physical retail products has increased substantially. Now it fluctuates, of course, and it's and I listen to your podcast all the time, and I listen to Andy all the time, and I know it's the premiums move around and the demand moves around, but nevertheless, the demand is there. And yet the mints would not supply us with the demand that we wanted. And we had demand that probably was 200 to 300 times, or 300 2 to 3 times our demand, or what we could sell, what the mints would be able to produce for us, and we could turn around and sell it to our customer base. And it was getting more and more frustrating. And I said, a year and a half ago, hey, look, let's just do this ourselves. And we got a building, we got the staff, we've got all the equipment, and we just started production literally 2 months ago. We're only producing 3 products currently: a 5-ounce ingot bar, 10-ounce ingot bar, and a 1-ounce kilo bar. It's under the name First Mint, a Nevada-based company, and we're super proud of it. We're only budgeting a couple million ounces to go through that mint in the first year, because there's growing pains and all the things that you have to go through to get it ramped up. But my goal is to get 100% of our silver ounces produced through that mint. And I'd also like to convince, Coeur and Hecla and many of the other mining companies out there to also put their ounces through this mint as well. And the whole rationale behind that, as because you interview tons of people and you're knowledgeable about this space, that there's a leverage in the system of somewhere around, we don't know exactly, but call it 300 to 1. There's something like 250 trading days in a year. Silver paper markets trade something like 1 billion ounces a day. So that's a call. Just round it up to 300 to 1. For argument's sake, we produce 10 million ounces. So 300 times 10 million is 3 billion ounces. So we know the banks leverage our 3 billion ounces, right? Or our 10 million ounces are leveraged to 3 billion paper ounces. So the banks know they're getting our physical metal, and they leverage that in the paper markets because they know it's coming to them, and they know when it's coming to them because we put up public announcements, and the entire mining sector does exactly the same thing we do. So the banks know how much gold's coming into their vaults. The banks know how much silver is coming into their vaults, and they hedge that in the paper markets, which creates this whole, manipulation, if you want to call it. And I'm not sure if that's the right word, but it's basically managing their book, I think, is probably the best way of putting it. But nevertheless, it has this constant supply of paper that's being put into the paper market. So during a Reddit squeeze, which did occur, there was a ceiling on the paper market because the banks knew the physical was coming in, and they were happy with the price, and they put a lid on the price in the paper markets. And then next thing you know, the buying dries up because the banks are bigger than the paper buyers. And of course, they know that once the buying dries up, this price of the paper market is going to drop, and they're just going to sit there and buy back all the paper. It's just such a wonderful game, and they love doing it. And they, so what I'm trying to do is pull off those ounces. So if I can pull 3 billion of paper silver ounces out of the market, it's not a lot compared to the amount trades on an annual basis, but at least it's the beginning. And my mission in life is to try to pull as much paper silver out of the market as possible.
That's remarkable. I mean, if you look at the combined efforts of all of the small-time stackers and individuals who bought their whatever they could, 10 ounces here and 10 ounces there, and in this case, you're in a position that enables you to affect that in a big way. But the end goal of this seems like it would be more honesty and truth coming to the market, where the actual price would be discovered based on the true supply and demand characteristics. And where do you see that supply and demand taking us in the next, say, decade?
Well, in order to, there's 2 questions, I think, and you did it to me again. So to answer your first question, you would have to get the regulators to put a limit on the banks. So right now there's no limit. The banks have no limit on what they can short. So if JP Morgan, HSBC, or whoever it is, wants to short a couple 100 million ounces of silver tomorrow, no big deal. They can do it on a click of a mouse, and it's pretty shocking that they can do that. There should be a system in place whereby we know what the world supply of silver is. It's about 820 million ounces last year, approximately. So, the bank should be just like a regular bank. You're allowed to go 10 times above your deposits. So you can't expose your bank, more than 10 times than what you currently have from your clients on deposit today. So that's a number. 10 times is what the banking system uses to manage their books. And I think the paper market should be the same thing. So if you limit, you got 820 million ounces of production, you limit the banks to 8.2 billion ounces at any given time. That at least limits them, and they can't go beyond that number, and that gives the producers at least a little bit of room to make a little bit of extra money. And what does a producer do? And this is really what drives me crazy: is producers supply communities with wealth. We educate thousands of children. The schools and the communities that we're active in were built by us in many cases. We supply the water infrastructure, the electrical infrastructure, the internet. We supply computers, pencils, papers, garbage collection, waste collection. We do everything. If it wasn't for a mine in a small town in the middle of nowhere, these communities wouldn't exist, and these children would not get educated, and they would not go into universities, and would not have a sustainable life. They'd be living in poverty, and yet the banks don't want the metal prices to go higher. So who are they actually hurting? They're actually hurting these small little communities around the world who can't get proper price for the commodities that these communities are producing. And it's quite shocking, and that more politicians don't come to the forefront and argue this point. And I'm always out there saying, hey, look, who are you hurting? Really, you drive through these small towns, and I've been through many of them. And from the early days in Africa, to my current position, in Mexico, it's the amount of wealth that the mining sector creates is phenomenal. Yet, we don't get the support from the governments because they don't want to, walk away from their desks and travel to these communities and see these, young kids walk around in school uniforms with computers in their hands and, wonder where all this money came from, right? It didn't come from the government, I can tell you that. So anyways, going to supply. I don't see any reason why supply is going to increase. I don't know of a large mine that's going to be coming online anytime soon. There's a lot of unpermitted mines around the world that could be permitted, but they're not permitted. So that's, up to the individual company. You should probably talk to them and get details on what's the issue, because every jurisdiction, every project has its own unique, issues with them and reasons why some permits take longer than others. But that's really what it comes down to, is really permitting. If governments want to see the green revolution continue on the efforts or on the direction that they want, or at least suggesting they want, the mining sector does not produce enough copper, does not produce enough silver, zinc. You go across the board to basically all metals. We're simply not producing enough metals to meet the demands that the governments are suggesting that we try to accomplish over the next 20, 30 years. And they're just, they're oblivious to what's actually going on in the industry. Metal supplies are dropping in front of our eyes, and the politicians aren't doing anything about it.
That seems to be a big disconnect between the two narratives. One saying we want a clean, new, electrified economy, and the other is we don't want mining. In fact, just today, a news story came out. Environmental Secretary in the Philippines, Gina Lopez, on Thursday issued an administrative order banning all prospective open pit mines in the country. There's also been stories that the president of Mexico may ban all open pit mining, or at least put restrictions on it. Is there a resolution that can come with different approaches to mining? Are there different types of mining methods that are going to be necessary in order to close this gap between the administrations around the world saying that they want the fruits of the mining, but they don't want the mining activity?
Look, the way geology happens is, you have gold on the surface. You get silver, next down from that, then you get your zinc, and then your lead and your copper. Your copper is generally the lowest metal, but there's parts of the world where due to volcanic history, the whole, geological system's been flipped on its, back, so the copper's on the surface. There's other areas of the world, like Chile, for example, where you had glaciation, and the entire top levels has been eroded away, so you had copper on the surface. And these are big open pits, and you can't turn those into underground mines. As simple as that. The copper's sitting right on surface, and copper is pretty important. Gold tends to be, obviously more challenging. Due to glaciation, a lot of the gold's been, removed, and it's in the oceans today. So so it's gone. Silver is much the same. It really depends on a jurisdictional thing, and what kind of mining is suitable for what type of jurisdiction. In very mountainous climates like the Sierra Madres in Mexico, or even in Canada. Some of the throughout British Columbia, you've got a lot of mountainous terrain, and so on. So open pit mining in those regions would not be possible. You're not going to go and take a mountain out just to create a mine. It's just way, way too expensive. So you have to build tunnels and then go after those minerals that you have discovered through the drill bit. But if it's underground mining, it's going to have to be higher grade. And this is where the big issue comes from. So open pit mining is cheaper. You don't have to build tunnels, and you just basically dig a hole, and you have trucks, and you go in there, and your biggest cost is energy, basically, and the second would be manpower. But they're quite low cost. You look at an open pit mine. You could be $2 or $3 mining costs, and maybe total all in costs could be south of $50 after processing and everything else. You look at an underground mine, and you're going to be north of 100, and some underground mines are even higher than 300. I've seen. So, it's a totally different economics, and it comes down to geology, comes down to jurisdiction, and comes down to metallurgy as well. Can the metal be taken out of the rock economically? What kind of chemicals you need to use to do it, and what kind of plant you need to build, and so on and so forth. So it's not an easy answer, Dunnigan, but I don't know what the problem with open pit mining is. Quite honestly, you're building a future lake for the local animal life. You can put some fish in it and put some houses around it, and have a nice little environment. Once the mine is gone, you can have a beautiful area to vacation in, and it's very short-sighted. Sure, if you fly over an open pit mine, does it look bad? Well, it's a hole in the ground. Doesn't look bad to me. It excites me personally, because I see all the engineering and all the hard work and all the wealth that's being created as a result of those efforts. I know how difficult it is for a company to get to that point, and I also know how much wealth it creates and the benefits that wealth generates. So that's how I look at it. Politicians have a different view when they fly over a hole in the ground or a hole in this Earth's surface, and they somehow think it's negative. Well, I don't know. I don't understand that, quite frankly, but it's very short-sighted as far as I'm concerned.
If you look into the next few years here, do you anticipate what developments do you anticipate happening that First Majestic Silver will be participating in, and how do you think that what are some things that people can watch for from First Majestic Silver? You already mentioned trying to get more producers to take part in First Mint. That's one. Anything else that you're looking for to hope to be able to announce in the next few years from First Majestic?
Well, we're a public company, New York listed. We have to be quite careful of what we say publicly. But I can tell you, 20 years in, I built this portfolio that we currently have, through acquisitions, and we're always looking around, and I hope to see, over the next couple of years, another major acquisition. Hopefully, then continually try to build our business, and that's what I like to do. And we're already one of the larger silver companies in the space, and I always have objectives and goals to be a lot bigger.
Well, Keith, it's been great to talk with you again. It's been far too long. Looking forward to being together with you at the Rules Symposium on Natural Resource Investing in Boca Raton in early July. Folks, if you want to look for a way to make sure that you can attend that as well, either in person or virtually, look in the description of this video for a link to get registered. And Keith, just thank you on behalf of all of our viewers and subscribers for joining us again on Liberty and Finance.
Well, it's a great opportunity, and thanks for your time. And about the Rules Symposium, it's at a wonderful resort. It's very well attended, lots of great speakers, and for those that have the time and want to travel, you gotta handle the humidity. But for me, I don't mind the humidity, but and there's a great pool there as well for if you want to take some leisure time on the side.
Great, Keith. Thanks for joining us.